7, 6.
Welcome back from the break for our cyber conference participants, and a special welcome to everyone joining us on our YouTube and board website broadcast. The conversation you're about to watch is part of an annual cyber conference that we are offering to members of our large and foreign bank portfolio. I am Lisa Liu with the Board of Governors, and I'm here with a man who doesn't really need much of an introduction, the Vice Chair for Supervision, Michael Barr. Vice Chair Barr joined the board about 14 months ago, and prior to that, he had extensive policymaking and experience, and also in the academia. Thank you, Vice Chair Barr, for joining us today.
It's my pleasure to be here, Lisa.
And cyber risk is obviously a big topic, and a lot of people are actually talking about the cyber risk. And I think cyber risk has been on top of many people's high-risk list for a number of years. And I know you've also given a lot of thoughts about the cyber risk. So how big a risk is cyber risk in your view?
Well, it is a top risk, a top priority for the banking sector. I think that experts agree that we need to work together, both the public sector and the private sector, domestically and internationally, to make sure we tackle issues around cyber risk. The risks are ever evolving. The technology changes, the techniques change. We have very sophisticated state actors involved and groups affiliated with nation states. And there's a range of activities from very sophisticated threats to phishing and ransomware. And of course, insider threat remains an important risk to be attentive to. And so we really need banks to make the commitment they need and the investments they need to stay ahead of these changes and to invest not only in prevention, which is absolutely critical, but also in the resiliency you need to recover if an attack is successful.
Resilience was a key theme coming out of the March, banking disruptions, and I think there were a lot of lessons that came from it. So what are some of the experience during the March that may be also helpful in preparing for cyber risk?
Well, as you point out, preparedness in March was one of the key things missing. We had banks that, for example, were not ready to access the discount window and other sources of liquidity when they needed it. So what we learned from that episode is, first of all, it's really important to have a good contingency plan. But second, you need to do the hard work necessary to test that work and to be prepared to use it. When you think about cyber risk, it's the same basic concept. We need banks to be ready, and that means having a good contingency plan. It means testing that plan, and it means being prepared to use the tools that they have.
You know, as you mentioned, cyber risk continues to evolve. You know, technology advances, it creates a number of different challenges. We know, based upon what we observed, you know, banks experience certain types of cyber attacks on a regular basis, like DDoS attacks, and they seem pretty well prepared to deal with that. But we also know things like a DDoS attack may mask some other more malicious attacks, and which may go undetected for a certain period of time. So I think that's just kind of a signal for the increasing sophistication of that, and kind of going back to your emphasis in both in terms of prevention part, as well as the resilience seems very important. And then also, I mean, there are a lot of technological innovations that's affecting the banking sector right now. So things like AI, a lot of people are talking about AI, and it has a potential, to be very beneficial for some of the things, banks do. And I can also think about the AI as a use case for cybersecurity. And we also know White House recently have embarked on a new challenge, the cyber challenge, using the AI technology that brings the public and the private sector together. But at the same time, things like those AI, in particular generative AI, could make the detection harder because, especially for example, like phishing attacks, it'll be harder to detect and potentially much more important about that. So. I think there's some need for an increased humility about what we are able to prevent, and the need for the resilience. So, what are your thoughts on some of these new technologies, including generative AI, and how would that affect the way we are thinking about cybersecurity?
Well, Lisa, first of all, I think you're right that technology is always evolving, and so we have to keep up with the next threat. Generative AI could be a really important new concept for the economy, for finance, for really many aspects of economic life. And as with any new technology, it will have risks and it will have some benefits. Thinking about generative AI in the cyberspace, I do think that there's a risk that there'll be an arms race, really, an arms race between those who are using generative AI to attack and those who are trying to use generative AI to block the attack. Mm-hmm. And that kind of arms race, I think, is going to be an area that banks are really going to have to focus on, have to make investments in, because we know the technology is going to be deployed, and we need to be prepared for that. So that I would say is a looming risk on the horizon, and a new set of investments that we're all going to need to make in making sure that our systems are robust to those kinds of uses of what otherwise could be a very beneficial technology.
Right. Yeah, I think things like quantum computing, a lot of people are talking about. I think it's the same thing. There are benefits and risks related to those. I tend to think, as fascinating as a quantum entanglement is, I'm hoping the quantum computing itself, the advancement is several years away, and I think it'll give us some opportunity to prepare for those. I think one of the challenges I think we have faced in thinking about investment into resilience is that it can be pretty complex and expensive, and the benefit benefit to the banks in such investment, or the cost to the financial markets when you do not invest in those kind of resilience has not been easy to obtain. But I think some of the research that is happening within the Fed and outside of the Fed provide some additional information about what could be the cost of such events. So, for example, the one study I have seen is thinking about what would be the effect of the disruption on the payment side of it, which is critical to the banking sector, and looking at some key players in the payment sector, and what they find is when there's a disruption for those key players and they cannot make a payment even for the day, the cost to other banking participants is significant in terms of their liquidity. So I think there's a connection between the cyber and liquidity is really interesting stuff, but people do not tend to appreciate it. Yes. And then those interconnectedness seems to kind of indicate that the cost of a cyber attack is really high, but still, I mean, this is a developing science. So how do you think about this interconnection? I know interconnections are important both for the financial risk, but interconnection in this space is also particularly important. So, so how do you think about this interconnections within the financial system in terms of the cost or the impact on the financial system?
Well, first of all, Lisa, I think you're absolutely right. When you think about cyber risk, there are two kinds of risks or costs to the system. There's the direct cost. There's a problem, an incursion. You need to address the incursion. You need to put a patch in place. Those are relatively modest costs in the scheme of things. But the real big risks and costs are the interconnectedness risks that you described. So if you think about, our financial system is really tightly interwoven. And if we have a really bad cyber attack at a major institution, that can have ripple effects throughout the financial system. Could be through the payment system channel, it could be through liquidity provision channels. And so those ripple effects can be very, very large. If a bank has to cut itself off in order to protect the rest of the system from a cyber attack, that cutting off has ripple effects that could cause bank failures. And so we really need to be super attentive, not just to the immediate risks of a cyber attack, but to these potential ripple effects because of the tightly interconnected nature of the financial system.
Yeah, and I think that's a really good point. I think in terms of ripple effect, and you mentioned about the financial system, but there are customers, the individual counterparties, and there are many interconnected parties to that who may be affected by that. So I think that's a really important point. And just having talked about how important is a cyber risk, it maybe turn a little bit about like what the banks should do and more, and as they face this increasing risk, and I think that your insight would be very helpful from that perspective.
Well, let me just start by saying, lots of different kinds of risks affect different institutions. So large banks have invested a lot in cyber risk preparedness, but they also pose the biggest collective point of potential entry, the so-called honeypot problem. Smaller banks have tended to invest less so far in cyber protection, and they're more reliant on third-party service providers. And if there's a problem at a small bank, it can then infect the rest of the financial system. So we're not any more safe if it's at a small bank than a big bank, because that problem can then grow into the rest of the system. So we have to worry about even the weakest link in the system. And lastly, there's the problem of third-party service providers themselves. So third-party service providers really need to invest in cyber resiliency, both prevention and recovery. And that's absolutely critical to safeguard the financial system as a whole. So we really need large banks and small banks and service providers to make the necessary investments on, first of all, prevention, and second of all, the resilience need to recover in the event that there's a successful attack. And that's what we're looking for, not just from the banking sector, but from also these service providers.
From supervisory perspective, we are taking your directions in this area pretty seriously, and kind of when we approach the supervision of the banks, and also services provided by service providers. And as you mentioned, I think both prevention and the resilience are very important. I think areas we are particularly kind of pushing forward is for the banks to have good controls. I mean, what we are seeing is when there are incidents, it's often more likely to have incidents when there are control weaknesses. And some of the examples would be identity and access management stuff, which is just really fundamental to make sure that who is coming into your system are the people that you authorize them to do. And so I think those are the areas I think we would want to see continuous improvement and investment in that. But then there is a resilience part to it that you mentioned. Resilience can be many things, and the way I think about resilience is that how they can both recover but also kind of resume their operations. And when there are some kind of cyber incident occurs. So. And resilience can be operational resilience when there are some when, let's say, one data center fails and can you fail over to another type of data center to continue operations, but also things that I worry about the most, like data corruptions, which may come from the malware, ransomware attacks, and how do you recover from that? And that requires some attention and investment into solutions. And finally, third-party risk you mentioned, I think that's very important in terms of contingency plans. Do you have contingency plan? And these are the type of questions I think from the supervisory perspective are interested in asking the bank about their capabilities related to that. Perhaps now maybe I would like to turn a little bit about your thoughts on the role of testing and as a key part of the bank's cyber risk management and resiliency.
Well, this really goes back in part to the discussion we were having about the stress events in March. It's one thing to have a plan, quite another to execute on the plan. And so we need banks to be testing their capacity to prevent and testing their ability to have the resilience they need to recover. That testing is absolutely critical on both sides. If you think about on the prevention side, one of the things that we found is that banks that do their own testing or have outsiders test the resiliency of their system, they find things that they wouldn't otherwise find. So we really need banks to be quite creative about the kinds of tests they do, to try different angles on that testing, to do exercises, war games, to make sure that they understand, again, not only the prevention side, which is so critical, but also when things go wrong, because they do, how are they going to have the ability to recover and to resume operations and to serve their clients and their counterparties with the least amount of disruption. And of course, our expectations for recovery are linked to the criticality of function of the bank that we're talking about. So institutions that are absolutely at the core of the financial system need to have the most amount of resiliency and recovery, and our standards are tailored appropriately to the risks of spillover from the institution we're talking about. But in general, really, both those things are really critical, testing of prevention and testing of recovery.
You know, a famed architect, Frank Lloyd Wright, once said that experts do not ask questions because they know. And, you know, and kind of follow through that statement is that if you don't ask questions, or if you don't think outside of you know, conventional wisdom, you're basically relying on your own priors, your own experiences, and your own expertise, which can be faulty. So just bring back to the something that you mentioned earlier this year about reverse stress testing. I think you mentioned about kind of the framework of thoughts, which called reverse stress testing, and you know, which may be beneficial in the number of those, you know, gnarly situations. But how do you think about the reverse stress testing within the context of, you know, cyber risk?
Well, Lisa, it's an excellent point, and you know, I think Frank Lloyd Wright's quip, I think, has a lot of validity that can help us in this regard. You know, you've heard me say in many other contexts that one of the things that I think is really important value for us as an institution is humility. The humility to understand that we may not see all of the financial risks out there, and to use that humility to make sure we ask lots of questions. Again, maybe that's from my academic background. I'm just used to questioning things. And I think that can help us uncover risks that we might not otherwise see. Reverse stress testing is, in a sense, a way of asking questions. So you start with the idea, this bank failed, or this system failed. And then you ask, what are the different ways that it could have failed? And cyber risk is, of course, one important area to ask about. And you know, when we're thinking about cyber risk, you can start by saying, you know, assume that this terrible thing happened because of a cyber incident, and then work your way through what are the ways that could have happened. And that really forces you to be creative at asking questions. And asking those questions can help you improve prevention and help you improve the resiliency necessary for recovery. So I think that approach is really useful. You know, some people get a little bit confused when I say reverse stress testing. I'm not talking about some modeling exercise that leads to capital implications. It's a thought process, a way of challenging one's assumptions to help uncover these potential problems. You know, humans are so good at pattern recognition. We're really good at finding things that have happened before, but maybe we're less good when the pattern is not one we've seen before. And so challenging ourselves, questioning ourselves, using reverse stress testing to think about different patterns is a way of overcoming that human bias that we have.
I think that's a really interesting way of looking at the issues. And, you know, oftentimes people, you know, say it never happened before. I mean, that's a, you know, often saying, and then, you know, it happens like several years later. And that happened before the last financial crisis, and, you know, it happened in other occasions. And so I think the reverse stress testing is a really good way of saying, let's just not assume the probabilities of something happening, and let's just think about what if it happens, you know, what will happen to that. And then I think it's also benefit is allowing us to think about a variety of scenarios that could be harmful to the bank. So I think that is a really awesome way of thinking about it. So can we just maybe talk a little bit about a third-party risk management that you talked about earlier? And this, this could be, somewhat of a challenging problem for the banks because the third-party relationship is just growing, in day by day. And so, can you just share your thoughts on the third-party risk management?
Yes, third-party risk management is absolutely critical, and banks really need to be in charge of making sure that they manage those risks. It's really a critical part. The banks need to treat the third-party risk management as if it were their own risk inside the institution, because legally it is, and from a supervisory perspective, it's required, and it's just essential in terms of the safety and soundness of the financial system. We've issued guidance on third-party risk management. It's principles-based. It gives the banks flexibility to do risk assessments so that they can use the appropriate level of third-party risk management to the risks that they face. But it's really critical that banks do that, and they need to do that in the cyberspace especially. I mentioned before that many smaller institutions use a lot of third-party service providers. But it's also the case that even very large institutions are moving to cloud-based solutions for their critical needs. And it's absolutely essential as they do that, that banks are ensuring that their relationships with third parties not only are not hurting them, but are actively helping them to manage their cyber risk. So I think we really, really need to have resiliency in critical service providers, and the banks have an absolutely essential role in making sure that that's the case.
That's great to know about third-party risk. Do you have any thought about the service providers? And as I mentioned earlier, part of it is the supervision of the services that's provided by a service provider. Obviously, they provide critical services.
Yes, they provide critical service to the banking sector, and that's why they have these resiliency obligations. We also, in addition to supervising banks with respect to their relationships with service providers, we also supervise the service providers themselves to the extent of their relationship with the banking sector. And that supervision is really quite critical, quite important. We need to make sure we have the data and the analytic tools we need to make sure that those institutions are meeting their obligations to the banking sector.
Yeah, I have a first-hand experience with a service provider, and when in 2020, just before the COVID lockdown started, a large service provider had a cyber attack, and because it's a large service provider, it provided services to many of the bank and wide-ranging kind of services, and they have to disconnect their systems, and the system was down. So, that experience was really helpful for me to understand some of the impact of service provider interruptions. When it happened, I think some of the lessons we learned is it's the basic stuff. It's like, do you have all the information centralized so you can gather those informations very, very quickly and respond to that? And other things are obviously much more technical, like do you have a preventative measures and stuff like that. But that is a little bit after the fact related to that. But I think one key takeaway from that experience for me is really important for these critical service providers to be resilient, and because a lot of banks are dependent on them, and I think that's kind of importance of resilience. It just it became very crystallized based upon my experience. And then I think just going back to your third-party risk management aspect of it is from the banking perspective. I think we want to see banks have kind of factoring in contingency plans for the third-party disruptions in their business continuity plan. I think that's definitely the areas we would like to see more from the supervisory perspective. Maybe I want to wrap up a little bit right now in terms of so kind of focusing on key lessons or key messages you want to send it to those who are joining us today. So I like to do everything in three. So I would say, what are the top three things that you think it would be good for the audience to take away from today's conversation?
Well, Lisa, it's a good question. I would say, first and foremost, plan. A plan for prevention, plan for resilience and recovery. That means investments not only in technology, which is absolutely critical, but also in employees who are really the first line of defense. They can be absolutely critical in preventing cyber attacks, but also if they're not well trained, employees can inadvertently introduce cyber risk into the system. The second thing I'd say is technology is changing rapidly. We were talking before about generative AI. I do think there's a real risk that we have a cyber arms race using generative AI with defenders and attackers in a constant struggle. So we do need to make sure that we are and banks are investing in the kind of technology that is useful not only today, but in the near future. And the third thing I'd say is test. Don't assume things will work, so have a good plan, but make sure you test your system both with respect to prevention, but also with respect to the resilience necessary for recovery. And that testing is really absolutely critical for the safety and soundness of the financial system and really for all of us.
I think those are all important takeaway. Before we actually wrap up, maybe can I just ask one question about what is the role of government and government agencies? So what is our role when it comes to cyber? It's not the problem that only one sector is facing, and partnerships or collaboration seems to be particularly helpful in this space. So can you share your thought about what is the role of government?
Well, Lisa, I think that we're absolutely critical partners with the private sector. We and many other government agencies have roles to play. Obviously, as supervisors, as safekeepers of information, we need to make sure that we are cyber resilient, that we invest in prevention, resiliency, and recovery, that we test our own systems. And so we need to be good partners in that way. And we need to be good partners in sharing of information. We have, as you know, good collaboration across the banking sector, the financial sector more broadly, and all the government agencies that are involved in this space. And that information sharing is really critical to improving cyber capabilities in the financial sector. So we really do need to work together. And I say this is true domestically, it's also true internationally. So we need that international cooperation as well. And I think if we work together that, we're going to continue to make progress on cyber resiliency.
Thank you, Vice Chair, for joining us today. This is for sharing your insight into this particular area. And thank you to those joining us via the YouTube and board website streaming event. For those participating in the cyber conference, there will be a short break, and the conference will resume at 1 p.m.
Thanks so much for having me.
Thank you.